Hello, and thanks for watching In Plain English. This week we are going to continue our discussion of XRP and Ripple's idea behind it. And I just wanted to finish out kind of this trilogy of videos on Ripple or XRP because there's too much to talk about. So the last time I left you, we were talking about kind of stable valuations of a currency and how your currency really can't have as many fluctuations in it, as much volatility in it as Bitcoin does in order to be a valuable currency asset because of the required stability in transferring of an asset. You have to be sure that both the buyer and the seller have an agreed upon value of this transfer. It can't change too much in between the buyer buying it and the seller receiving it, or the other way around, between the seller selling it and the buyer receiving it. It has to be a pretty stable currency. So Ripple has made 100 billion of them to help control the supply and demand curve and keep the asset stable so that when banks transfer from one to the next, they don't have to worry so much about the volatility that's going on during the transfer. You know, if you're transferring 100,000, it's going to arrive as roughly 100,000, not significantly more or significantly less. What that means for investors is that Ripple will hopefully be kind of a long-term play. It's not so much of a trader's market. Bitcoin, you can make a lot of money very quickly as an investor. Ripple, you're not going to make a lot of money very quickly, but by doing a slower rollout, say, they're able to be adopted by this banks, and they will be a longer-term play that will slowly, the more and more customers they get, the higher and higher in value they will get. Bitcoin, I think, might be a long-term hold as a store of value and certainly has its worth in that. But it's a much better asset to trade. So this is going to be trading rather than investing. So the other last thing to mention and to talk about is if you want to maintain that stable transaction between transferring 100,000 between two banks overseas, say, the other way to do it besides maintaining a slow growth curve is making that transaction as fast as possible. So if it takes 5 days, which is what it currently takes to get assets from the US to Europe, say, USA, Europe, then even with current exchange rates, even between $1 and the euro, that can change, especially if you're trading huge amounts of money. That can change over those 5 days, and you get a different asset value. So, I mean, again, say maybe you're trading $1 billion, okay, and then when that gets transferred over, and the dollar has gone up 2 cents in that time, then when you transfer it to euros, you're losing 2% of that $1 billion, which is whatever that is. What, $200,000? Maybe $20,000? 2% of $1 billion, which is kind of a lot of money if you talk about doing that in every transaction. Ripple combats that by being able to have a very quick 3 to 4 second transfer of assets. And so, again, along with having a stable, steady growth curve, there's not much that can change in that 3 to 4 seconds. A lot can change in 3 to 5 days. Not a lot's going to change in terms of value in 3 to 4 seconds. So that's the way that they kind of are able to stabilize the value so that the banks can adopt this currency and use it. They're able to do that by having incredibly fast incredible amounts of processing power. So they can process about 14,000 transactions per second. Versus, again, not to compare it to Bitcoin, but I have to. Bitcoin can transact about 8 transactions per second. So if you were trying to have a worldwide currency, and I guess the way to think about this is 8 transactions per second would be like saying you have, you're checking out at the grocery store, and you have one teller, right, that can do 8 beeps per second. So if this person in line has 8 items, that's going to take them 1 second. This person in line has 16 items, that's going to take them 2 seconds. And so what happens is, as Bitcoin's popularity grows and more people get in line, you're going to have these longer and longer lines with longer and longer wait times to get your transaction processed through the cash register. Ripple has solved that problem by having amazingly fast transaction capabilities, so that there's now 14,000 tellers waiting for these people to check out with their goods. So that means that because there's so many options, so many cashiers to go to, there's very rarely, if ever, going to be a long line. So your transaction speed, your time at the store, is significantly shortened by that. Bitcoin, I think, has recognized this, and that's part of their forks, which we talked about in one of their other videos, is that they're trying to also increase their transaction speed, but there's some pushback within the community about what to do about that. We talked about that in another video. But that's the idea behind the transaction speed. So Bitcoin's ideas are primarily store of value, great investment. You can make a lot of money off of that. Ripple is going to be a slower investment, a long-term investment, with scalability, and so they have rapid transactions, stable currency, and kind of the ability to act as a worldwide digital currency, which is kind of their goal. So thanks very much for watching. That's the end of the Ripple trifecta of episodes. Hopefully you're more well informed now about what that is. It has a lot of animosity within the cryptocurrency within the crypto world, because the founding principles of this world were that people would be able to work together and not have to answer to these big all-powerful banks. So again, you can look at it in different ways, but Ripple has essentially decided to work with the system rather than against it. So it's a lot of people in the crypto world are upset because the crypto development was to try to overthrow, or at least the Bitcoin development was to try to overthrow this current system, and Ripple's decided that's not feasible. They're going to work with it instead of against it. So depending on your philosophy or your thoughts or your ideals, you can totally avoid investing in Ripple. You can invest in them for that reason. I'm not arguing which one to invest in, or invest in both. I mean, cryptocurrency is going to be around. The blockchain is going to be involved, and it's just a question of which philosophy is going to ultimately win out. Probably a lot of them will win out. One last final comment. What I equate the blockchain right now to the way the internet was 30 years ago, and the fact that there's going to be some of these that are going to be Google's, right? So if you bought Google when it first came out, you're doing very well. Apple, same thing. It's the same as the .com bubble, where there were right now there are 11,000 different cryptocurrencies. There were, I don't know how many hundreds of thousands of websites, right? But some of those websites have been very successful. Some of those companies have been very successful. Some of them have gone by the wayside. And that's what's going to happen with cryptocurrencies. So almost the more diversified you can get, the lower risk you're going to have, because at some point this is all going to go up. It's just a question. There definitely will be a bubble, just like the .com. We're probably in one right now. There definitely will be some ups and downs, but the blockchain technology is not going away. So the more exposure you can get to it, the safer you'll be. Or you can try to be risky and, swing for the fences, as it were, and you might hit a home run. People with Bitcoin have already done that. Many of the altcoins have already done that, and so you can pick one and try to make millions, or pick a bunch and play it safer. But that's my non-investment investment advice. Anyway, thanks for watching in plain English, and next week I think probably I'll get off of cryptocurrencies and we'll talk more about retirement accounts and what to do with all this money that you're going to be making off of crypto. Thanks for watching. Please remember to like, comment, and subscribe. I appreciate all your feedback. Thanks a lot.